If your trades keep hitting stop loss before moving your direction, this is probably why. A few days ago, I took this gold sell and shared it inside my Telegram community before the move happened. I did not wait for the market to prove me right before showing it. Now, look at where the trade is. So the question is, what made me so confident enough to sell before everyone else? Most traders spend hours looking for the perfect indicator or for the perfect candlestick pattern, but they ignore the one thing that tells them what the market is actually trying to do. Today, I will show you the exact process I used for this trade. It is only 3 steps, and the last step is the one that has helped me catch countless sniper entries. Let us start with the first one. Step 1. Market structure. Before I look for any entry, I ask myself one simple question. What is the market actually doing? This is what we call market structure. If you ignore market structure, every buy and every sell becomes a guess. You might win a few trades, but over time the market will expose you. Most traders are told to buy at support and sell at resistance. That sounds simple, but market does not move because a line is drawn on your chart. It moves because buyers and sellers are constantly taking control from each other. So instead of asking where should I buy, ask yourself who is in control right now. On this gold chart, you can clearly see that the market is giving us the answer. So you first need to understand market structure. This market structure tells you who is in control of the market, buyers or sellers. Take for instance, if a market creates a high and creates a low, creates higher high and creates higher low, another higher low, higher low. This is uptrend. It means buyers are in control. But if a market creates a high, then creates a low, creates a high, this is called lower high. Then it creates another low. Because the low is lower than this previous one, it is called lower low. Lower high, lower low. This is downtrend. It means sellers are in control. So from here, we can see the market created a high, a low, lower high, lower low, lower high, lower low. This means sellers are in control. So this is downtrend. For that reason, we are going to focus on looking for selling opportunities. Once I understand the market structure, I already know which direction has the higher probability. But the market structure alone is not enough. Many traders get this part right and still lose money because they enter from the wrong location. And that brings us to the second step, which is step 2, high probability POI. Now that I know the market direction, I still do not enter the trade. This is where many traders lose money. They see a bearish market and immediately sell. But just because the direction is correct does not mean the entry is good. I wait for the market to reach a high probability point of interest or POI in higher time frame like 4 hours and daily time frame. Think of it like this. If you know it is going to rain today, you still wait for the right time before leaving your house. You do not just run outside because you know rain is coming. Trading works the same way. Direction tells you where the market wants to go. The POI tells you where you should pay attention. Now let me show you the exact POI I used on this gold trade. There are many ways I use to find high probability POI from higher time frame, but the one I used for this gold trade is double breaks of structure. Let me show you how. If a market creates double high, then eventually break this double high, the first retracement is usually liquidity, provided it is near a POI like demand and supply, because what I trade is demand and supply. So the market will come to take out that liquidity, tap into that demand, then it will continue in each direction. So here on XAUUSD, we have the first break of structure and we have the second break of structure, showing that sellers are in control. So where is the inducement or liquidity? This high is obviously the inducement. Next question is, where is the POI closest to this inducement? What I trade is demand and supply. So here I will mark out my supply zone. So this is my supply zone closest to that inducement. So this is my higher time frame high probability POI. This is the same process I followed before taking my trades. It is also why I was confident enough to share the setup in my Telegram community before the market moved. If you want to see my breakdowns like this, you can join my Telegram community. The link is in the description. It is completely free. And just to be clear, it's not a signal group. It is a community where we learn together, share important trading guides, and I post some of the setups I am watching before they play out. Now, even with the right market structure and the right POI, I still do not enter. This last step is the difference between chasing the trade and catching sniper entries. Let me show you what I mean. Step 3, confirmation, the most important step. This is the step most traders skip, and in my opinion, it is the reason many traders have the right analysis but still end up with the wrong entry. I do not enter a trade just because the market reaches my POI. I wait for confirmation. For me, that confirmation comes from liquidity. The market does not move randomly. Before a big move happens, it often takes liquidity first. That is why you will see price sweep highs or lows, trigger traders into bad entries, and then reverse in the right direction. That is the confirmation I wait for. So when the market touched my higher time frame POI, I'll go down to the lower time frame to look for confirmation. On this lower time frame, we can see the market clearly swept this liquidity. We got a change of character here. After this change of character, the first retracement is obviously liquidity. And where is the first retracement? This high is the first retracement, so it is liquidity. So where is the POI closest to this my liquidity? It is my supply zone, which is here. So this supply zone will be my entry, my stop loss will be just above it, and my take profit will be this liquidity here. As you can see, the market has not touched that liquidity, but I'm very confident that the market will come down to take this liquidity. If you want to learn more about liquidity, make sure you subscribe to this channel. Once I saw my confirmation, I had a reason to trust the trade instead of guessing. That is how I get many of my snapper entries. It is not because I can predict the market, it is because I wait for the market to reveal its intention before I risk my money. This gold trade is still running as I am recording this video. I am confident in the setup, but trading is never about being certain. That's why I already secured partial profit. No matter what happens next, the trade is already managed according to my plan. If there is one thing I want you to remember from this video, it is this. Market structure gives you direction, high probability POI gives you your location, but confirmation gives you the confidence to execute. Miss the last step and the first two becomes much less effective. If you enjoyed this breakdown, I want to learn alongside other traders. You can join my free Telegram community through the link in the description. It is not a signal group, it's a place where we study the market, share trading guides, and break down risk setups together. Thank you for watching. I'll see you in the next video.